All right, guys, as you know, cash flow is key to building time and money freedom. We're going to talk about how to make big cash flow quickly. We have a huge guest on here, guys. He's going to talk about business, how he failed, how he turned it around, built a 31 Airbnb property portfolio, how he got there, had the disposable income to get there in the first place through wholesaling, and did this very, very quickly in just over a year. We're talking about how to create big cash flow, monthly cash flow with little cost up front and to do it quickly. Welcome to the podcast, George Salas out of Houston, Texas. You got a great story, George. Let's dig in.
Connor, how you doing, brother? Thank you so much for having me in your show, man. I am honored, and I'm happy we're here today, right now, man. It's a great day to be alive, isn't it?
Yeah. So we met at a mastermind down there with John Jackson, King of Lease Options. Gave you a little plug there, John. Down in Houston the other day, and George got up and told his story. Great story. You guys are going to enjoy this. A lot of you guys are entrepreneurs watching this. You know, not always do every business we try take off. He had a big wipeout, but bounce back quickly. And I think you're going to like the time frame of how fast this can be done because he used the Airbnb model to kind of scale cash flow business quickly, growing fast, but he had to use other investment strategies like wholesaling and flipping houses to create disposable income to lead into those deals. Tell them the story, George. What did you do? You were doing a nightclub, running a nightclub. How did it go? And kind of how did you get here?
Let's do it, brother. Okay, so it all started actually after Hurricane Harvey here in Houston. I was so tired and I was ready to jump into something different, right? And my nightclub ended up closing. I was a partner in a nightclub. I put over $400,000. We didn't own the lease. I knew nothing about real estate, and I got into a deal with a bad partnership and ended up losing every single dime. Okay. So turn around.
I'm laughing at you. I'm laughing with you because I know what it feels like. I think a lot of people do.
Yeah, I mean, you got to go through those trials and tribulations, and you have to fall to get up even, stronger and to come back and build something even bigger than you had before, right? So that's just part of life. And as an entrepreneur, I can tell you that I've been rock bottom 2 years ago, and I'm on my way up. I'm building, and it's only been 15 months. In Airbnb, but I'm loving it. Real estate has been a blessing, and the people around me have delivered a lot of value. I've got great networks. I've got great friends, and I met you, so definitely even more.
Well, I mean, it's pretty common. I mean, most of the successful people I know in business or in entrepreneurship, especially in real estate, failed big time. And when they failed, it put them in a spot where it created a compression point where, especially emotionally, where you hear the saying, burn the ships, and it created an energy level that they wouldn't have had otherwise. So that curse became a blessing. Similar to myself, I went almost 100 grand debt. You had the same story I do. A lot of them had that same story. So guys, if you're listening to this right now and things are not that great today, no storm lasts forever. You keep pushing, you push through, and you'll have a bounce back story. So you are killing it with Airbnb right now, scaling quickly. You're one of the few people I've met that's actually scaled quickly. We'll talk about how you did that. But it takes a little bit of money. We're going to talk about the 3 different strategies that you're using. And you need to have money to put the furniture in the property, to maybe use a master lease to cover the first month's rent. So let's talk about your real estate strategies, because you got into real estate quickly and had a pretty good year and made some disposable income. And you were doing what? You were wholesaling houses, flipping. Kind of tell about that. And then what you did to get into your Airbnbs.
Absolutely, Connor. We kicked off our first deal in February of 18. Okay. And then it was actually a flip. It was a flip, and we purchased it. I had to borrow money to put that down payment, and then we ended up going through the rehab process, and it was my first rehab. So my partner at the time, we did a few rehabs together. He was a contractor, so I was the guy that found the deal, brought it, and then I was able to acquire the funds, the loan, to be able to renovate the property, right? So we got that property first started, made $46,000, split it into 2. So that kind of kicked off my real estate career in the summer of 18, right? By then, I had 3 or 4 properties that we were rehabbing. So overall, we did 14 in 2018, and then I've done a couple this year. But the focus of doing those rehabs was to get into the game, to learn how to flip and rehab properties, just to get to be able to not just acquire some cash, but build a strategy that would give us some cash back. I ended up not liking it, to be honest. I'm not a big, we didn't have the systems or infrastructure, but it is just a pain in the butt to rehab properties, and not having the systems and infrastructure and obviously the cash didn't allow us to really, really maximize it, right? So I took a few of the flips cash profits and actually put it into the wholesale business that I was starting at the time. And I had no idea that I was going to end up, legitimately building an Airbnb, a real estate business in Airbnb, right? So between July of 2018 and also the end of the year, we reached almost 99,000 in wholesale fees. So we were able to utilize that capital from the time that we started acquiring the leases to be able to get those first, 8 leases. I think we got 2 in July of 18 and then 8 in August. So that we kicked off, built the revenue through the wholesale business and some of the as well. And we were able to acquire properties at one time, which, literally from nothing. So that was a strategy to start off the business. And I didn't know it was going to happen this way. But I heard about Airbnb. I saw it was great. I saw the opportunity. I researched it, right? I did my homework. I learned it. And then I stepped in. And between the time I found out what it was and the time I got my first 2 Airbnbs, it was maybe 2.5 months, right? So you've got to take action. That's one of the biggest things. You can't wait forever in making a decision. So to me, sometimes when you're younger, you're able to take a little bit more risk. So I had nothing to lose at the time. I loved the model and I wanted to find something that fit me. And it ended up being Airbnb. So by August 31st, we were already at 10 properties while managing about 5 or 6 rehabs and still 3 to wholesales a month at the time, right? So pretty much how we got it all started.
What do you mean? So you guys got to understand, life can fall apart quickly, but can also rebound quickly. And business is kind of like a video game. You start one game or one level in that game, knowing what to kind of expect, but then the next level always changes. And so most of the successful entrepreneurs I know, the business that they really blew up, the life-changing business model that really changed their life was one, just like George said, he had no intention to get into. Happened to me twice. I had no intention to get on certain businesses, but now they're very profitable for us. You have to look for opportunities, be prepared for opportunities as they come up. And then when you see them, jump on them quickly. And really, you should be looking for early adopter stage opportunities. So you have the innovators, the early adopter stage, early majority, late majority, and the laggards, I guess, as for what we learned in economics. But when you're at the bottom floor of an emerging business model and you attack it aggressively, you beat your competition to it and you take the opportunity out of the marketplace before anybody else can do so, which you did. But before we talk about Airbnb and how you got your first ones and how you kind of financed them, what were you doing to get your wholesale deals? A lot of people on here are acquisition companies or trying to become an acquisition company, wholesaling, flipping, landlords. They're trying to acquire deals at a discounted price. How did you get those deals? Because 6 figures to hear your first year wholesaling, it's pretty good.
Yeah, it was, man, I'm going to be honest. I started with just a little bit of marketing, but most of the deals as a marketer, born and raised marketer, since I was in the marketing game, and doing event promotions for 10 years, I put the word out in my network, okay? And I did not do real estate marketing. I put the word out, okay? And you've got to be resourceful, right? When you're starting and you are hungry, that shows how much passion you have when you're doing something if you're going to pursue it until you are successful, right? So I utilized every resource I had, I still have. I partnered up with other wholesalers. I figured out how to convert these leads that would come in through my social media, Facebook, through my posts, and just convert them just from people around me. I would get referrals. Building relationships with people to me is really important. I respect the fact that I have a lot of friends and a lot of people that I know in this town, and then they know me. So over the years, I've built many of them. So referrals just start coming, right? And it's not going to happen to everybody, but if you even go out there to the meetups and start meeting other people, provide value. That was one of the other things. I got several deals from people that I met in the real estate world that were just getting started. Maybe they were about 3 or 4 months behind me, and they were bringing these deals to us. And at the time, I was just extremely hungry and looking for the opportunity, right? So we converted a few of those deals from other wholesalers. I had referrals, like I said. So just taking the opportunities and then changing them into something that's going to bring you value, and then delivering value back to the people that brought the opportunities to you.
Right. I think a lot of people underestimate the power of referral marketing. They kind of roll their eyes. They're like, well, I need to be doing some high level cold calling system. Some of the biggest deals we ever bought were from referrals. And when someone does a referral, it's giving you the kind of like a hybrid between most people know in sales, warm market, cold market, but I break them down to hot market, warm market, cold market. So a traditional warm market would be someone that you already know or have a relationship with. A cold market would be someone that's completely unknown that would not know you from a stranger, right? So I break that into now warm market being a hot market, but the warm market would be the referral market where someone's giving you a first party referral testimonial, say from a partner that's a contractor or somebody else that says, hey, you should call George. He can help you out with your property. It's a lot better coming from, it's a kind of a hybrid of a cold market, or warm market lead, which is what I call break them down this way, because you have a lot better opportunity to get that deal. Like let's say two people call, or one homeowner calls two different investors. Mm-hmm. One is calling off a postcard or gets cold off a cold calling system. The other one is the daughter referring the mother's house to George. Says, hey, George, you should talk to my mom. What do you think is going to happen? If they make the same offer, you're coming from a better position for referral marketing. Now, this disposable income, you wanted to put it into a cash flow property, but you chose Airbnb, which is an increasingly more popular strategy. Let's talk about the three different strategies that you use in your business. Now, we're going to talk about these one by one. So a partnership management process, then actually doing a master lease or sublease, take over property that way, and then also the acquisition side and the benefits to each. So what would be the first one that these Airbnb investors can use? They can get into a property and just kind of manage the other property for the landlord. Kind of break down how that would look.
So if you have no money or very little to no money right now, so one way to acquire or become an Airbnb host and make money from Airbnb, and that's how a lot of people get started, right? You first start co-hosting, and you've got your full-time job. You co-host for somebody else. You start saving, $1,000 a month. 6 months later, you're able to get your own property, and it's all a compound effect, just like Darren Hardy says. So it all just accumulates, right? So one way is that I did not utilize at the time because I wasn't familiar with it, So for all you guys out there, if you have very little money to no money and you've got very little experience too, helping someone else out as a co-host is a great way to get started in the Airbnb business, right? And to find these properties and these hosts, attend your real estate meetups. First of all, you're gonna see that a lot of these investors have Airbnb properties and they don't want to manage them because it's work and they're focused on growth, or they already have too much work, right? So attending the Airbnb meetups, attending real estate events, real estate meetups, conferences, and also, you can find other hosts through the Airbnb app and just inquire and say, hey, do you guys need a host? Or, one big one, join the Facebook groups. Here we're about to launch pretty soon our own meetup, and it's going to be an Airbnb meetup, and it'll be the first consistent one in Houston. So, and you guys will hear it. And the group, inside the group, you can find all kinds of information, tips, people to work with, other hosts. I think there's 2 to 3 groups here in Houston. So if you just simply look up Houston Airbnb on Facebook, they'll pop up.
So how would that look? So there's a landlord has a property vacant, and you reach out to them and say, hey, look, do you know the type of income opportunity? I'm sure you heard of what's going on with Airbnb, but do you really understand how powerful it is? I know you're a busy person. Let me help you run this. How does that work as far as a structure? They're going to provide the furniture and fill the property, or you're going to provide that? How does the distribution you would approach them with? Y'all want to split the cash flow 50-50 on top? And kind of how would that look when you reach out to someone? Because this is probably how most of them are going to have to get into business, or the next strategy we're going to talk about, because the third one is going to take the ability to be financeable or some higher level knowledge of the business. But so kind of how would it look with a structuring? Let's say I'm a landlord and you kind of reached out to me.
So I would also call that management partnership or co-hosting. But the key component here is relationship. Okay. If you have a relationship with an investor that is actually very interested in doing Airbnb, then and you have this host that is hungry to, or want to be host, is hungry to get into the business and doesn't have very much cash, the component right there that's going to make it all happen, the magic is in the relationship, right? So if you've got the relationship, or at least the trust and credibility, because people do business with people they like, know, and trust, right? So that one component will build into the management part. But as far as structuring, you can structure it, if you're going to put no money, right, then, and you're going to have the landlord slash investor put in the property, get the lease, or if he owns it himself, furnish it, get the loan or whatever if he's going to buy it. Then the management fee most likely is going to be a little bit smaller than if you come in as as an actual management company, to where you're needed and they're outsourcing to you, right? So if I was George and I'm coming to you, you own, an apartment complex with 4 units, fourplex, right? And you're thinking about doing Airbnb, it's right on the beach. And I say, I would say, Connor, we've got a great relationship. I would to you and say, hey, I know you want to do Airbnb, right? But I've got some a little bit of a background into XYZ. Could be marketing, hospitality. If you've worked at a hotel, at a restaurant, at a bar, you have hospitality, and this business is hospitality within the real estate, right? So if you have that kind of experience, I definitely recommend to enter the space, right? Because it's a great opportunity. So I would approach you and simply ask you to figure out how to connect it all together. I will learn the way to manage and skills, and I will watch the videos, and definitely I would guide you onto it if you're an investor of a higher level, right? But structuring maybe 10% is below average. So if you have a partnership with someone that's going to furnish the entire place or purchase it, and you're partnering with them, and you do have hospitality getting experience, right? Then 10% would be ideal. If you're a company and you already do this and you want to acquire more properties, using the same acquisition strategies they're going to be helpful. But the standard, 15 to 20% management fee is still on the low end. Most people charge right now 20 to 30% to manage a property because there's so much work, so it's crazy.
Well, the benefits of this strategy is for you young entrepreneurs, or those that don't have a lot of money in the business, is you can do this with time. You don't have to be bank financeable. You don't have to qualify for a bank loan. You don't have to provide the upfront capital costs. They're going to put the furniture in the property for you. You're just helping manage it. So you can trade your time to build a business. And then as you start making money, you can get into the next step. Let's talk about the next strategy, which is kind of how you really got your footing in the business. And it's a great way to build cash flow, where you just partnered with current existing landlords out there leasing the property and went through a master lease agreement with them and kind of break down how that looks. And this is also important, guys, because you still, once again, do not need to be bank financeable and own the real estate to do this, but you can start your cash flow business quickly.
So the first thing I did after studying the business, figuring out it was going to be a great model, was contacted my realtor, and I said, hey, I want to put an offer to every single 1-1 in this zip code, 77002, because I was sure that area was going to work. And I did not jump into this business knowing exactly how reverse engineering, just like we do now, figuring out how much we're going to make per month, right? So it was very, very risky, not knowing my numbers. I don't suggest you guys to do that. Now there are many tools, and I'd love for you to check out Airdna, which is a great tool right now. You can utilize that tool to figure out the actual cash flow, take out your expenses, your rent, your utilities or whatnot. But reaching out to all of these property owners, I think we put about 40 offers with my realtor, Joe Applewhite. Shout out to my boy. And then one of them went through. They didn't want to rent 2 properties to us. We applied for 1 or 2 at all of them, right? They wanted to rent 8 of them. So to me at the time, it was a blessing. I had to borrow some of the down payment a little bit after, because to put 10 properties at one time is $50,000 minimum, right? So at the time, I closed 3 wholesale deals in July, and we put the down payment. And the three wholesale deals that in that month were about 40K, so we were a little bit short. So to get those extra few deals, we were able to close them down and stage them. So by the end of August, we had 10. 40,000 was from our money, and I believe about 20 was from private lender loan that we took. So that was to get started.
Let's kind of break it down costs. So when you're looking at doing the strategy, you're reaching out to a landlord who's got a property out there, looking to lease it, but you're like, hey, let me come in, let me lease it from you, and I'm going to do a master lease, and I'm essentially going to do an Airbnb strategy behind it, but I'm going to be your tenant. I'm going to guarantee your rent. So you had to pay them upfront lease agreement. You had to give them 1 month's rent upfront.
So typical is going to be your 1 month in security deposit. And you're going to have to sign the lease either under your personal name or a corporate lease under your entity. I suggest you to try first, all you guys out there, try to do a corporate lease. And then when you go and apply, don't say, I'm doing Airbnb. Say, hey, we do corporate rentals or short-term rentals in the area. I would like to see if you guys will lease the property to my LLC. Now, if they say no, it's still okay to get the lease to your name. And all you do to protect yourself from liability is lease it back to your entity. You create a lease and you sign it, and then your entity signs it, and then now you're protected from any possible lawsuits that you might have from any tenants that get into accidents or whatnot, right? That's how you protect liability-wise. But structuring, you structure it, and you're at about $2,000 to $3,000 depending on how much the rent is, right, on your first month and security deposit. If you're able to find good, cheap furniture, I've got some awesome hookups on furniture, but go to Craigslist, find your furniture. Don't try to do the older. Maybe try to find some good wholesalers that have good deals. But you don't have to get expensive furniture, right? What you have to do is worry about the small details that will make your property, a 5-star property, rather than having expensive furniture, because the furniture is the same. You're just going to have something that's a little bit cheaper. I recommend you to put some adjustable bed frames, because most of the cheap furniture items are going to be the sets $400 or $500, right? So if you add $2,500 plus $500 plus maybe $400 or $500 in labor, and then $1,500 in essentials, your electronics, your essentials, your cleaning supplies, your ornaments, things you're going to put, your linens, towels, and all that. I mean, you're looking at $5,000 for a 1-bedroom, maybe about $6,500 or $7,000 here in Houston for a 2-bedroom, depending on how nice it is. 3-bedroom, about $10,000. We just did a property in Hockley, which is our 33rd. So between the last time you and I talked, we purchased a property in Hockley, and then we picked up a new Airbnb. Well, it's an Airbnb from a different host that literally just gave it up. And when I went in there, it was missing like 30 things that are very essential for the success of your Airbnb, right? He sold it to us for $1,200. We took over the lease, and the whole Airbnb cost me $1,200 basically, right? So I put up to $1,200. We picked up a property, and it's already done like $700 or $800 in a matter of like a week and a half. So we are already on the positive on that one property. And the one we're staging in Hockley, we are at a budget of $10,000, and we're $9,500. So this is just doesn't include labor, because I've got a staging team now. So we spent $12,000 on a 4-bedroom, 2.5 bath, 2 baths or 2.5 baths, and it came with it came with a refrigerator already. So it had a refrigerator and all the appliances. So not a washer and dryer though. But yeah, you're looking at about $2,000 to $3,000 per bedroom with essentials. Maybe a little bit less, about $1,000 for your kitchen. So if you add all those components, then you have that $12,000 for the property, right?
Okay, and so some of these properties, you're probably most of them in between $7,000 and $10,000 out of pocket, which is why you're going to need to flip houses or wholesale or sell houses as an agent, create disposable income or work a job. You put it in there. What are you looking at as far as a traditional? How many nights are rented a month on the average property? Do you think? I mean, it's going to fluctuate from time to time, but what is a traditional income that you're bringing in? Kind of how does it break down with your expenses? Kind of give a case study of one of those properties on what you can potentially make with just one Airbnb property.
Okay, so I can break it down, and I would love to maybe even show you the sheet, but I'll have to go into the actual breakdown of the sheet. If I can share, it's up to you completely. But I can break down the property that we just bought in Hockley, and the projected cash flow is 64,000 a year. Okay, and out of that, our PITI is 1850. It's a subject to. We put down $5,119. Okay, the loan is the property is probably at a 90%, but most of the time we don't buy at 90% unless we're going to do something that is for different exit strategies such as Airbnb. Or obviously, if you're going to even be a landlord, that's not going to work. But this is a interest very low. It's 5%. It's a great loan. It's 3 years in, so it's got a little bit of equity, not a whole lot, but that definitely helps. So we put in 12,000 for the entire staging, and that includes 2,500 in labor, and then 9,500 for the furniture, essentials, electronics, et cetera, et cetera. And then so you're looking at 17K to do a 4-bedroom. So projected for this, we are our break-even point is about 2,300 to 2,400. Okay, and that includes utilities. If there was no Airbnb, one Airbnb booking, we would be looking at about 2,300 to 2,400 with cable, internet, with electricity, water, gas, et cetera, et cetera. So on this particular project, now if we do 4,000 in sales, our variables are going to change just a little bit, right? So if we do 4,000 in sales, we're looking at merely at a 10% profit, because if we do those numbers, we still have to pay for the management company. You've got on top of the 23, 24, my management company, I've got employees, so we always calculate the management fee into the budget when we're doing when we're reverse engineer, we're doing our market research. Then you've got the cleanings, and that also varies according to how many bookings you have per month. You're also going to have your utilities, which we've averaged at about 400 to 500. That's what I'm 1849 plus about 500 is 2350. So yeah, I mean this property is projected to make over a year about $10,000 to $12,000, which is merely about $950 to $1,000 a month. But that's not going to come in all at once, right? What we do is we project the entire year, but we know that this business is a little bit seasonal. Okay, so don't listen to what everybody says. Oh my God, you're always going to make money, blah, blah, blah. It's not always every single month. There are some months, especially if you're in vacation areas, that you're going to have much lower, and then your summers are going to be great, right? So for example, right now, our business is slow and we're still going to profit, but it's very slow. Then October, we broke records. So it goes from one month to the other. And the reason for that, you've got different things happening in the city, right? On our downtown locations, or the weather might be much better during the season. And in December, when it gets a little bit colder, people tend to travel a little bit less, unless you're in neighborhoods, and neighborhoods is more steady than being on vacation areas or even downtown. And downtown you have business people, right? So you've got a completely different crowd going into these Airbnb properties. So we have our downtown locations, which are really busy during the week because it's downtown. People stay there, and then their access is everywhere. You can go to the medical center within 10, 15 minutes. You can go to the Toyota Center within 1 block. We're right there at the Toyota Center in Houston. So we project according to month and season, but you average it per quarter or in a whole year, right? So this property is the one in Hockley, we're looking to do about 10 grand for the next 12 months in profits if it hits, or when it hits, the 64,000.
Man, that's pretty good. I mean, think about that, guys. Like the average person, works $40,000 to $70,000 a year in most markets around North America. So 5 properties essentially replaces your job, and then you double that to 10. You're essentially doubling your income. And this is cash flow coming in once you get it stabilized and you have the right pieces of the puzzle in place, right? Now, so the first one, you're just doing a partnership with someone out there in the marketplace, co-hosting. Second one, you're doing a master lease. Now, the third one is probably the most beneficial, which is kind of what the example you just gave right there, which you're actually taking title to the property and owning the property. And the reason why this is powerful is you're getting the equity in the property, you're getting the principal pay down on top of the normal cash flow, and you have control of the property, and you just have a lot more opportunities doing this long term, I guess you could say. So kind of how did you get your first ones? You're doing a sub 2 this one, but did you acquire any of these with bank loans, or kind of give me an idea of?
I have 4 properties that I currently own and 3 that I'm rehabbing / selling, right? Different exit strategies. The ones that we own are an Airbnb. One is in the north side of Houston, and doing currently about 4,000 to 4,500 with a $1,000 monthly payment. This one we just refinanced, and we bought it to rehab. Then we put it on the market. We were it was one of the flips that I told you out of the 14, right? And we were selling it. We had it on the market as an owner finance. Our margin was very small because our GC went a little bit over budget, which happens, right? Especially when you don't have the infrastructure to do the flips. So not gonna hide it. We went over budget. So, and then we turn around and say, okay, why don't we just Airbnb this thing? And my partner was like, hey, really, you want to Airbnb it in this neighborhood? I'm like, look at the numbers. It reflected 28 to 29,000, and we're doing $4,000 a month. So 12 times 4 is 48,000. And what Airdna and my market research told me that it would do under $3,000 in gross. So we were going into a property not knowing that it was really going to hit it. So now we're in the 4th month now. It's cash flowing, anywhere between $750 and $1,250 a month, which is great, right? And we're putting in. It's got a pool, so we've got to maintain the pool a little bit. So this is one. The other one, we've got another one on the north side of Houston. Several of them are. This has been an Airbnb for since May, and it's just doing at $300 to $3,500 every single month, very steady. And the third one is a Cypress house. We hit 4,800 on gross sales this month, which is the highest out of any of our properties down here in Houston. This was a 5-bedroom, 3-bath. And then the other one is Hockley that we just finished staging, and we already have a few bookings. So you getting these sub 2s, I mean, it's going to take you maybe $5,000, right? Why wouldn't you take this strategy, put 5,000 down, own the property, get the advantages of tax deductions, equity on top of all the cash flow, right? To me, the purchasing model, especially if you're putting in the same amount to acquire it, right? If you put $5,000 to acquire a rental, you're going to put $3,000, right? To buy a property, $5,000, hey, get $2,000 more. Find yourself one of these sub 2s with 2 to 3 years on the loans. People want to get out. They're having maybe they're moving out of state. They're getting a divorce or something like that. It's just like the one that we acquired. We're getting divorced, and take this opportunity to grab one by one, right? They're out there. So $5,000 is absolutely nothing. Then you put 12 in, and then you make it pretty much all back in a whole year. So you make your money back in a year, and on top of that, you get all the equity in the back.
I mean, that's the best way to do it. I mean, so some of them are going to have to work their way up, though. A lot of them have time in the beginning, and they have a little bit of money. Go to the second strategy. Third strategy, keep the property and own the property. Now, you mentioned, what did you say, Airbnb or Airdna? What is that, and how is that going to help them analyze the property and kind of give them a little bit of breakdown what that does?
So Airdna is a tool that analyzes about 80 million properties around the globe, right? Here in Texas is very good. There's 2 sides of Airdna. One gives you the actual, it's called Market Miner, the perspectives on the market and how much each zip code, it breaks it down by zip codes, how much each zip code can revenue. And it gives you 5 components, with a few of them being the demand, the seasonality, the factor of loss, how much the business growth is projected to be from the previous year to this year. So it's always on the next 12 months projections. So these numbers that are being thrown at you, they're pretty accurate and sometimes on the low end, right? Because these people are going to have low performing properties. Most hosts have 1 to 3 properties. and because it's such a new business model, right? So you're gonna if you are good and you become the guy at it, or even if you're just committed and passionate about what you do, develop this property and it'll surpass the numbers that are there. Those numbers are standard, and if you've got some really good properties also, and you got some good listings in the downtown area or whatever with super hosts or people that are really taking care of their properties, then those are going to be your higher comps, right? But most of them, they're going to be low comps because most people, they don't know how to do this business legitimately. Like, it's not like a business, it's a side hustle. If it rents is going to help me pay the mortgage and make $300 a month extra. No, we're doing it as a business, and you need to take your business seriously, right? So even if it's just one property, work on your excellence. In my opinion, everything I do, I want to do it at my best, right? So excellence to me is a big thing that I've been working on.
Well, that's important because it is a business, and except for the last strategy where you're actually owning the property, it's a combination of being an investor and a business owner. So let's kind of talk about the business functionality of this, because this is where a lot of people get stuck and kind of hung up on scaling. How do you track all these properties? How are you tracking the income coming in? Are you using spreadsheets? Are you using CRM? What do you do to that? And then we're going to talk about maybe how you get these properties cleaned, and then how you kind of scaled, and kind of how you're going to continue to scale. Because I think that's, talking to most people doing Airbnb, that's their biggest hurdle, is the time management, all the working parts, and how they're scaling. But you kind of brought everything in-house. Let's kind of talk about that. First, how are you tracking them, and then we'll kind of talk about what you've done with your business, on how you kind of pulled it all into one house.
So tracking, inside my Airbnb business, I have like 5 LLCs, right? So because when you own a property, we need to put it under, like, 3 of them are management, and if I've been able to acquire and have these leases owned here, and then to protect my investors and the money, I just create an LLC which is owned by my inner loop LLC, and then at the end of the day, everything is just flowing when it comes to your taxes and your income flowing to your main LLC, right? So I've got 5 different LLCs, and then one of them is just for one property, and the other one is for just one property. I've got 3 that are working in conjunction with each other. So as far as tracking, you're able to track the income from Airbnb per property, and then we throw it into Xero, and my bookkeeper just she follows the direction that I give her, and then she also gives me direction on certain things, and she tracks these numbers, right? And we just keep an account by, your expenses for this account. You're going to have X amount of properties, and then you track the income, and then we break down expenses. So let's just say we bought $300 in supplies, and you have 10 properties in this LLC. I take out the 300 and I just divide it by 10, and that's $30. So $30 is applied to track that property's expense, and then we subtract it from the total revenue of that actual property for that month. So that's how we track the production and actual performance of each property. So that was tracking pretty much. Anything else you want me to explain on tracking?
No, I mean, probably just it's just smart to keep them separated. It could get pretty hectic, especially if you're doing multiple partnerships, to kind of pool everything in one place. It could cause some pretty big problems. Let's talk about the cleaning system that you're doing, because this is probably where a lot of people struggle. It is like running a hotel business in a way, except all the units are not in one place. So how do you get your properties cleaned? How often do you think you have to clean them, as far as like how many, what's a typical stay period for a customer coming in? Obviously you want the longer the better, a week or more at a time, but what do you traditionally see people staying a few days, a week? And then how do you get the cleaners out there, and kind of how does your system work?
So in my eyes, most of these reservations are coming in not for 1 or 2, anywhere between 3 and 7 days. So we want to get them there longer. So we run a few specials on maybe 5 or 6 days, 4, 5, 6 days, and to attract a little bit longer bookings. But some areas are going to be shorter bookings, like downtown, very trafficy and then a lot of turnover because it's right there in downtown. So you're going to have people coming in for a game for one night, and that sort of thing. But the cleaning system that we have, it took us a while to put it together and to really optimize it, right? We started off without using anything. We started using actual Plan Day. So when Plan Day is an app So that worked pretty well. We used that for about 6 months because we had 10 properties, so we needed one cleaner, right? And we put them on the schedule. There's a lot of scheduling apps, but they didn't connect or hook up to any of your Airbnb or another one. So we had to manually do it. Right now we utilize a tool, and then the tool is called Properly. And then this software is a cleaner management software, and it allows us to schedule, and it hooks up with Airbnb through an API. But it allows us to schedule an actual clean either automatically or manually. And since we have different areas, we do some automatically, some manually, right? But my biggest point and the biggest thing in this whole entire I would say cleaners discussion is to have one person. If you don't want to do it, and you as the entrepreneur, right, I would not suggest, if you're starting an Airbnb business, Connor, I would tell you, go find your team, right? And you need one person that's going to run that. Either your main cleaner can run your cleaning schedule, or a person that knows the business, knows the properties, right? So in my example, I've got a young lady that is great at scheduling. So she runs the scheduling. It runs any tasks that the cleaners need. Probably I think we're undergoing to about 15 or 16 check-ins right now, and I'm sitting here chilling with you. So building the team is key. And if you're thinking scale, teach the person that you're raising, or you want work for you, all the little areas of your business that can become your integrator, right? She or he can become the person that will help you operate. Now, if you just want to do one or two, learn it yourself. And then at some point, you can outsource this to your kid, to your sister, whatever. But the system is simple. You've got Properly. It connects to Airbnb. Airbnb sends a reservation to you, and then she checks in the morning, every single morning, because we have 300 reservations a month. So every single morning, if there's something that came in the night before, after 7 or 8, and then she schedules it in the morning. So you've got to have rules for your own cleaning team. So we do, and they do pick up the last minute cleans. If you just have a couple properties, I wouldn't suggest to use Properly, but maybe something like Plan Day, right? We actually just added, and just a quick tip off subject. We added this maybe about 4 or 5 months, a tool, an actual strategy to our operation, and it's early and late check-in, early check-ins and late checkouts. We charge like $25 to $35, and people love the actual, service or the extension that we provide to them. And it's mentioned in the messages, and it's automated through another software that we use. So it's called Wishbox, and if you guys want to check it out, also, it's a great software, great tool, and it allows you to actually upsell a car ride or third-party vendors that can come in if you're in a location that has bikes, or you want to get some of these cool things that people can walk in. Instead of walking, they can have a service of hookah, right? Mopeds, or whatever you want to do to provide an enhanced experience. Wishbox is the perfect tool to automate that side, that upsell in your business.
That's some good stuff. You get a good piece of advice in there. Test something on a small level. Once you have proof of concept works, scale it. Now, mistakes. What are some of the big ones that you made? What are some of the things that they're probably not going to know that they're going to encounter? Every business has those hidden traps that you can fall into. What are some of the biggest hurdles that you came into this past year while you're doing this? And give some warning to these new Airbnb investors, kind of what to prepare for.
So I would say the biggest is the communication, right? Whoever is doing your front desk, the front desk needs to be a very sociable person, love being on their phone or computer, right? I would say phone mostly, because you can manage this business from your phone. So we've missed out on a lot of money because of late responses on inquiries. We lost a lot of money because of some refunds, and I didn't catch on until 6 months after. So if you have a complaint, there's a process, and you're going to have complaints. We're in the hospitality business / real estate, and people will complain. They find a reason, right? So when you have that, I've got an awesome process, and it's my claims process, and it's my refund process. I literally learned every regulation and guide from Airbnb. I know to the top of my head, and now I utilize their own guides and regulations against whenever they want to do a refund or a claim, right? So now I utilize the knowledge I have to avoid losing hundreds of dollars, right, or thousands of dollars. So, for example, one of them was this. I think this happened recently. I looked at the reservation, and this person wanted a refund for their stay because they said it was not clean. But we followed every process, which is a message sequence that I've developed, and it's automated, right? And then the messages go. But she never said one thing. So she wanted $500 to be refunded, and we followed the process. And Airbnb's guidelines say the guest must reach out to the host first to fix the situation, right? If the host doesn't respond, then Airbnb will intervene. So, and then the host has it's time sensitive to solve any issues depending on the level. They have like level 1, 2, 3, right? So this obviously wasn't a level 3, but the guest wanted her money back. And then we simply said, and it was $500. She never reached out, number one. So you utilize your knowledge. And then number 2, we followed up and asked her every single step, and there's not a message every single day, but you do it in a certain sequence that you're not bothering the guests, right? So we have a 10 message sequence, and then message number 10 would be, hey, how was your stay? Just to remind you, we have selecting checkout guidelines XYZ, and then if you paid for late checkout, don't worry about leaving at 10 o'clock in the morning. XYZ, right? So you've got that, and then you ask them, how did everything go? And if they don't say anything during 10 days, they get out, they leave, and they want a refund, then you're not going to lose your money. You do run the option to give them a certain amount of money back, but it'll gain you depending on if she already gave you the review or not. But if we try to reach out to guests, and our team does the best possible to do that, right? So avoiding those fatal mistakes will refund you out of money, because let's just say you're making $500 a month on a property. That reservation just took your profit. Think about it, the entire month.
It's unfortunate. The world's full of trashy people, and if there's anything going on in the world, people will figure out how to exploit it. And this has actually become a big problem. I have a lot of other friends, not doing it full time like you are, but do properties like this, and this complaint that the property's dirty. It's a big one. And if they file bad complaints, what does it do? It drives you down in the rankings, or you can't get your property found as much, which drops your nightly rentals. How does that work if they file a bad complaint?
So if they ask for a refund after, you can work out and give them a certain amount of money back, whatever you want, right? It's all about the review. So if it's dirty and they don't give you a review, nothing happens. If it's dirty, they give you a really bad review. But most people, they try to hold it against you. I see it. If you don't give them money back, they will threaten to give you a bad review. They use this as a tool, and Airbnb doesn't allow that. But we're actually working on developing some relationships with the supervisors at Airbnb, and I don't know which of the big hosts has this type of relationships, but people will do this all the time, and we just work very hard to provide, number one, a 5-star experience every time, right? That's and then number 2, if there's an issue, to solve it in the best possible manner, right? But if there is a question, typically you just got to deal with it. But preventing and anticipating the problems, that's where the key lies to not getting refunds.
I mean, you got to do something like where there has to be like a check-in process approval, like day one going forward, like where for example, you have your cleaners film a quick little video, give a time and date or something, like, or somehow to prove it, because it's going to continue to happen. For example, here's a kind of a different story. So like I got a car wreck. I've been having to take rentals. I've been using Turo or whatever, sure. Essentially Airbnb for cars.
Yeah.
And this young lady tried to cheat me. Well, she did cheat me, and it wasn't worth my time to fight it. But she essentially, I filled up the car full of gas, dropped it off, and she tried to say that I dropped off with no gas and tried to hit me with this gas charge. And she's like, well, can you send a picture showing that you filled it up? And I was like, well, I just did. I don't have anything to show you. And she was like, well, I'm going to submit the photo of the gas where it was not filled up. And she submitted a fake photo from before that I couldn't prove. And I'm like sitting here like, what am I going to do? And so I ended up getting like $50 extra of inconvenience fees, and just she figured out how to do this little ripoff system.
Yeah.
So what is there to cross? So like for my time, like, looking at the time I would have had to fight this and the energy, I was just like, whatever, just this little person, I'm just going to let her do what she's going to do. It's sad that people do these things, that they're that limited in their thought process that they have to figure out how are you going to build a business screwing people over, right? So it's like they don't understand, but what is your cross-checking power in doing this if someone clearly does this? Because this is happening more and more where they figured out, hey, I'm going to get a discount. They're hurting your business. What happens? How do you prove that? Can't you file a complaint against the tenant or the guests or whatever? How does that work? Because they should have a
you can review them.
Field.
Yeah, you can review each guest, right? So, and the team does. They review each guest, and the cross check lays with your message sequence, right? And the message sequence will allow you to escape anything that these people are trying to fake. Now, if it's true and your cleaner did, which has happened tons of times, right? Because nobody's perfect. At the same time, some people are not careful enough, and we've tried different cleaners, right? And right now we partnered up with a new group, and they're doing wonderful. And their attitude's great, right? So the cross check is number one, doing your message sequence with the proper questions. Number two, knowing your rules just in case it does happen. And then number three, utilizing an actual software or some kind of tool that will allow you, which is properly, and it allows you to submit pictures. But when you submit just pictures, just say you do one, right? And they're submitting just photos. You don't have close-up photos. And when a guest tries to complain, they'll take a really close-up photo of one little tiny hair, and they'll submit it. And Airbnb will be like, "Oh, you violated the Airbnb guidelines." And I'm like, "Okay, we'll go clean it right now. Don't worry about it. That's it. Hey guys, emergency, whatever, like it's property Stanford number 7. This is happening." Boom, right away, you solve it, nothing happens. So I would say your emergency measure, have your team ready to go on call, and then take those 3 preventative measures. Number one, having your system and figuring out, and simple. Like I'm not going to give you my 10 message sequence over right now, but I can tell you that you just need to ask them if everything is okay as many times as possible without bothering, right? Then you're going to know your guidelines. If you're a host and you have 33 properties like we do, then I know my guidelines, and I study. You got to know these things, right? As the leader of your tribe, knowing the little things is what's going to make your company better, step by step. And number 3, simple, just have a tool or have the cleaner submit photos to your WhatsApp chat or, Trello or wherever you guys are managing that, Slack. So they're all awesome.
Man, is there anything that you want to bring up that I haven't thought about? This isn't a strategy I'm doing personally, but I like the strategy. The only warning that I would give, you young investors is that things can change, markets can change, laws can change. I've had some people in the Northeast have Airbnb properties. So at least if you're going to take title to a property or go into a long lease agreement, make sure that at least you can rent the property to cover that debt service so it doesn't put too big of a burden on you. Other than that, I don't see much wrong with doing it. I think it's great business. Is there anything else that I didn't ask that you think is important?
You know what? I want to tell the audience out there, and especially the investors that are just getting started. Like I was there 15 months ago starting in the business, and then 20 months ago I started real estate, right? And I did whatever it took to do what I was doing at the time. I wanted to get a flip. I did whatever it took to find the money to freaking fund the flip, right? I wanted to get Airbnbs. I did whatever it took to find Airbnbs. I wanted to do wholesale deals. So it's not even on what you're doing. It's really focused on what's up here. And are you going to give up, or are you not going to give up when the hard times come? Because they will come every single time.
Right. You got to be a little bit crazy, a little bit obsessed. And I think a lot of people like the idea of being successful, and then they get out there and they say, the water's a little cold. Maybe I don't want to be successful. So business is not easy. but it's the hardest, easiest thing you'll ever do to have a better life than you have right now. What's hard is working for someone else for the rest of your life and trading your time for someone else's goals and dreams to come true. So whatever you got to do, figure it out, push hard, and just keep going, because sometimes it happens quick. Sometimes it doesn't happen when you want it to. Look at George's story. He started other businesses. They didn't go well. And now this one, it's gone extremely well for him very quickly. And people are going to say, oh, George, you're an overnight success. No, he was learning skill sets, and he went through the ups and downs before, and he found what worked for him. So guys, this is a great business model. How do they reach out to you, George, if you want them to contact you locally in your market, or if they just want to, I don't know if you're going to do any consulting and training, because a lot of people are trying to figure this out. People may want to reach out to you for some help like that.
Yeah, absolutely, Connor. My main website right now, and then I'll tell you what we're launching, and you tell me what your thoughts are. But my social media site is George Salas 360. We'll put it, I'm pretty sure it's going to be right there on the link below or above, right? We'll GeorgeSalas360.com. So it's actually GeorgeSalas360.com. You can contact me there. My phone number is there. You can book an appointment. There's all my social medias are there. So every way to contact me is there. I'm not going anywhere. And then as far as, yes, I do. We do private coaching. We only do 2 students a month right now, and some awesome things are happening. And so 2020, we're going to be launching a turnkey Airbnb business. I don't know if I mentioned this to you, but my skills and my journey to pursue my passion and my goals, it's not just building a business, making money. To me is I found my purpose, and my purpose is not only to build money, success, but to help other people build it. That's why I'm teaching. All right. So right now it's just the beginning. So we're providing service in small scale. So we've done a few workshops. We're going to be actually putting together some trainings and maybe a conference next year sometime. So if you guys want to stay, I guess on top of it, join our group, Facebook group. It's Houston Airbnb rent and profit. So that's another one. And then the turnkey business is simply going to provide your typical investor or non-investor with a turnkey solution, which is finding / acquiring the property, right? Staging it, and then if they want management part, right? So those 3 models right there, I'm already doing it with some of my students. They like it because sometimes they don't know anything. So I'm on the first one, I give them the process and then I do it for them, right? So me and my team, I've got an awesome team, and they are wonderful. They kick ass. They're getting better, So we stage the properties. We're staging our property right now. We just finished the one we took over. We cleaned it up a little bit. So just doing the whole entire thing and delivering a turnkey product, I think is a great thing. Nobody else has it out there. So yeah, surprise.
Well, man, as an entrepreneur, I respect what you've done bouncing back like this. I'm excited for you going forward. Ready to hear your story about how you took it over 100 units, and we'll maybe bring you back on here when you do. And other than that, set those goals big for 2020, George, as well as you guys listening right now. And this should be a decade of prosperity if you put the time in. Other than that, guys, thanks, George, for coming. Appreciate you.
Thank you, Connor. It's a pleasure, man. Thank you so much, brother.